All right, we're going to go ahead and get started. Good morning, everyone. My name is Micah Matthews. I am one of the marketing directors here at Messer Financial Group. I'd like to start off by thanking everyone for attending our webinar this morning. We're very fortunate to have Jeff DeSantis with NSS, National Slovak Society, with us today. They have a lot of really good products and a lot of really good rates, and we want to show you exactly why we feel you should partner with them and have them in your portfolio if you're doing any type of life business. But before we begin, I want to go ahead and show you just a few things on the Messer Financial website. If you notice here, this is messerfinancial.com, and most resources that any agent will need can be located here. If you haven't done so already, I highly recommend checking out some of the agent resources that we have available. If you do not have E&O insurance, we do have a great rate on those, so you might want to check that out. If you ever want to know about our lead program, you can lead resources here. Also, if you have any questions on that, feel free to give us a call anytime. We're more than happy to help you. And also, all of our webinars that we do are posted on our Messer Learning Center. So if there's ever a webinar that you missed, or even just a product that you want to learn more about, the chances are we're going to have something available for you here. So this webinar will also be added to this website whenever it's over, usually about a week after the webinar. So again, if you ever miss a webinar or anything, you can always come back and watch it again here. Also, if you ever want to add contracts, there's our online contracting, and we also have quoting tools. So if you hit quote tools, you'll see we have a quote tool for just about every type of product that you want: ACA, Medicare Supplement, Advantage, Final Expense, life, term quotes, annuities. And if you ever need an application or a form for a life carrier, you can usually find them here. And if you need to order a paramed for whatever reason, you can set up your account here. It makes it very easy. I highly recommend Exam One. That's the one I usually use, and you can have live, up-to-date tracking on what the status of a paramed would be. So, like I said, a lot of useful information right here can be found anytime. So, with that said, I'm going to go ahead and turn this over to Jeff DeSantis. We're going to have questions at the end, so if you do have some questions, there should be a spot where you can type them, and we will answer those at the end of the webinar. So, Rebecca, if you will transfer it over to Jeff, we should be good to go.
Thank you, Micah. Good morning, everybody. Thanks for joining us. I'm just going to get started here. Hopefully everybody can see my screen. Just getting my, the first thing I'm going to do is I'm going to take you through a, can you see my screen, Micah? Everybody seeing that?
Yes, I can see it.
Okay, let me get out of this here. Let me do this. Trying to get to my desktop. So anyways, can I see if I can move this here? 1 second. Okay. I want to get out of here. Anyways, I want to get to my desktop and go through some things with you guys. And go through. The first thing I'm going to do is go through our illustration. See here. See, well, I'm trying to move this a little bit, Micah, so I can get into my desktop.
Sure.
I just want to minimize this. Okay. There we go. Okay. All right. First thing I'm going to do is I'm going to go over a quick presentation of who we are, the National Slovak Society, like Micah said, and just to kind of recap who we are, so you'll get a little history and the background of who we are, and then that'll help you guys know exactly. Okay, the first thing is we've been around since we're 125 years old. I put there young here. We're called the Slovak Organization. We're one of the premier Slovak organizations. We're also a nonprofit, so a lot of things that we can offer to you and to your clients, like, for example, scholarships. We have scholarship funds for any child who gets a permanent life policy for us will qualify for a $500 scholarship each year they're in college for the first 4 years of college. And it's very simple. Those are some of the things that we do, but we'll get into that a little bit down the road here. So also, we have our members. The members, once they buy a policy certificate, life certificate, or an annuity, they become a member. We offer life insurance and annuity products. Again, some of the things that you want to know for you as an agent, we're $1 billion in assets. We just hit that. We have very good investments. Our investments for our portfolio are extremely high. You can see we have high ratings. And the Moody's, we invest in what we call blue chip investments. We have 30 million plus in total surplus, which that will go up because obviously all our financials aren't in for 2018. These numbers that I'm giving you are all based off of 2017. Again, it says here 2014 was another great year for sales. That was our best year in the last 3 years, but I think 2017 will beat that year. Over the past 5 years, you can see our assets have been up 166%, premiums up 400%, and surplus 42%. So we continue to grow. You don't have to worry about if we're going to be around. We've been around. We're just turned 126 years old. So next week we will celebrate a birthday. Scholarships, like I said, some of the fraternal benefits, we do up to $2,000 of scholarships. We have things in the area for different areas, regions like athletic, bowling, youth programs. We do contests. Every person who gets a certificate with us or an annuity will get a publication. That's how they know about the scholarship fund for when they got kids that are going to school. Also, some of the things we have here at the home office in Pittsburgh, Pennsylvania, that's where we're located. We have a museum. We also have community activities. Again, just to review our products, because I'm going to get to the meat and potatoes with all of you. I'm going to go through some illustrations. That's where the rubber meets the road. We have life insurance. We have annuities. We have IRAs, Roth IRAs, Coverdell, and also investment growth fund, which I will review all those shortly. Again, we have whole life products. I didn't put a slide in for that, but whole life products are simple. We have a single premium. We have a 20-pay life and a whole life product, which I will show you on the illustration software, some of those premiums, just so you can get an idea of how aggressively priced our premiums are. We also have term products. We have a youth term, which is a very valuable way to get into homes. You can have a one-time pay for that. The amounts that they can get insured are $10,000, $25,000, or $50,000. Again, we also have a 10-year term, ages up to 65, and a 20-year term, which is up to age 50. Again, our annuities right now are fixed annuities. We have an 8-year annuity paying 3.5%. We have a 5-year annuity paying 3%, and our guaranteed minimum rate is 2%. Meaning, if everything collapses financially in the country, we won't go below 2%. But we've never ever had to go on our guaranteed minimum ever. Had to do that. We've always kept our what we call our competitive interest rate. And right now we're at 3.5. Some people have asked us if we will be going up since the feds are looking at raising the rates. Yes, we will. One of the unique things about a fraternal organization, just to talk real quick about the annuities, is if we have an increase, say, and that would start for the second quarter. So if we're January, February, March, and we're going to start a new quarter in April with a 0.25% interest, we go ahead and pass that on to the client without them having a new surrender period or have to do a new contract. We just pass that on to them, which is unique in the annuity industry with products. Again, here's our preferred 8, our preferred 5, our optimum 3, which is the 2-year. Our preferred choice is just a 1-year. And then our SPIAs, we have a 2.75 for less than 10 years and a 2% for greater than 10 years. We have a Roth. We do the Roth Coverdell. We have the Roth IRAs. We do the Coverdells too. We can do all that for your clients. Real quick, the Investment Growth Fund is a fund that we use this for agents to build relationships in the field. And I'll give you just how that works. Again, the minimum deposit is $5,000. The current interest rate is 2.25%. But this is for nonprofit organizations. So say you sit on a YMCA school a board or a private school board, and they're nonprofit, and say they're doing a building fund, but they need to collect $5-6 million, and it's going to be over a 3-year campaign. Say they have $1.5 million already collected, and you're trying to see where you're going to put that money. You can put that money with us, and we'll get you 2.25% right now. The minimum it can go is 2%. The thing is with that, you don't get any commission off this, but the great thing is this helps a lot of our agents and people in the, in your field of work where you're working, in your networking organizations with, in your community. This helps build those relationships. So that's some of the things that we do have for that. One of the other things we just did, and I shared this with Micah, we have a illustration software that I'm going to show you, which we've had for many years. And you can see the software link, and we can get those to you. Micah can get them to you, or I can get them to you. Also, we just came out with a mobile app. This is really a great tool that we just launched maybe a month or so ago. The mobile app is nice because you can have it on your iPad or your iPhone, and then you can do a quote right from your phone, and then you can put in there what, like your signature, like who it comes from, your name, your company name, your email address, and all that. And then it'll say email it. Who do you want to email it to? And it always sends a copy to you, but then it also sends, and then you send it to your client, or maybe maybe you work as a manager for another, other guys, agents underneath you, and they need a quote. They don't have their quoting system. You can send it to them. So it's a really unique thing that we have that most companies, like I said, do not have on a mobile device. Again, we're located in McMurray, PA, which is like 15 minutes outside of Pittsburgh, and this is some of our contact information, but Micah can share that with you too. And again, my name is Jeff DeSantis, my email there, and my cell phone number. So if you're looking at copying down any number, take that cell phone number there at 412-585-2204. Copy that down, and if you need me, I'm always available. Mike will tell you I'm very responsive back to that. So, all right, the next thing I want to do, Micah, you have any questions on there? Can you hear me?
Not yet, nope.
Okay. The next thing we're going to do here is I'm going to get out of this, and I'm going to go back to my desktop, and we're going to, then what I'm going to do is, let's see here, minimize this. Okay. The next thing is I'm going to get into a few things. I'm going to go over our product chart, our life chart, and then I'm going to go to our annuity chart, and then I'm going to get into our illustration software. So the first thing is I'm going to show you our life chart, and hopefully everybody can see this. I'll scroll up. Again, our life chart. I do want to point out one change. Our whole life, our 20-pay life, and our single premium, one of the unique things for us and for you in the field is that we write up to age 95. We also have face amounts. We just changed the whole life amount. The whole life amount now is $10,000 as a minimum. But the 20-pay life and the single premium are still $5,000. Again, I'll make that the whole life product that you see there. It can still be written up to 95, but the minimum face amount is $10,000. And then the 20-pay life, again, and the single premium are $5,000 up to age 95. Again, I talked to you a little bit about our youth term. We have a single premium youth term. We also have a youth term annual premium, and then we have a 10-year renewable term. And you can see we just raised, you can write this to age 70. It was 65. We raised that to age 70, so that person can have that coverage, up to age 80. Again, you got your 20-year level term, okay? The next thing I'm going to do is real quick just go through our annuity product. And then I want to get into a couple things with our, okay, you can see our annuity chart. Again, we have the preferred 8, 3.5%, minimum 2%. If you look over there, you can open up an annuity with us, the 5 or the 8 year, with a minimum of $90 a month, which is basically, it's $1,000 deposit if you do initial deposit, or $90 a month. You look over to the right there, you see that the penalty-free withdrawals, surrender charges. Just keep in mind, if you're doing any surrender charges there, the first year it's 9% penalty, 876-543 and 2, and then for the 5-year product. Those are the two most aggressive products that we have for the annuities. We do about $150 to $180 million in annuities a year, just because of the great rates that we can provide for the client. Okay. One other thing that I want to get into, well, let's do the illustration software first. I'm going to get into the illustration software and show you how easy that is to use. Come up here. Okay. Sure everybody can see that on their screen. Okay. All right. just to surf through this a little bit, the resources that you see here, where I'm pointing to with my icon, my arrow there, if you hit that button, there's a couple things that come up. You have your insurance needs calculator, which is nice. You know, if you're looking at creating a what a client needs is in insurance, you know, and you want to show them, you can do that. One of the other things under the resource tab is, appears a little slow here this morning, is the life expectancy calculator, and I'll show you what that looks like. You just put in the current age, height in inches, weight. You put a few things in. There's alcohol, driving, blood pressure, family history. You do all that, and then they give you a life expectancy for them, you know, because you might be with some unhealthy people even at young age, and might help support the need for the insurance just to make sure that they're protecting their families. Also under here is the agent reference guide. The agent reference guide is everything that you will need ever to have any questions about with doing business with the National Slovak Society. In here is just about insurance guidelines, what states we're in. You can see here there's a height and weight chart. There's even in this book, I just want to scroll down here and show you one of the unique things that it has in here is the rates. You can do all the rates in here. You know, there's also, you know, our motto, fraternal programs that we have, publications, but I'm not going to get into all that because I really want to get to the illustrations. But in this book, this reference guide, you can actually do quotes by hand. Some of the older agents know that. They were debit agents. They'd be out in there. There's it'll give you the amount of the insurance. It'll tell you the plan. Say, for example, you go to 20 pay life in there, and it'll say, you know, for a 44-year-old man, it's $2.20 per thousand. And it tells you, you know, you take that times, if you're doing 20,000, take that times 20, and you can figure out if you don't have your quoting system with you, or if you just needed a rough, you know, you need to do a quote right on the spot. So that's just the resources up there. Now, I want to show you over here to your left, this quoting system. I showed you the download, the illustration software download that we can get to you. Mike and I can get that to you. You'll see once you download, this is what you'll get. You'll get this whole icon, and then when you open it up, this is the quoting system. You'll have whole life, term life, and annuities. We're going to just focus on the whole life. So the nice thing about this, let's just go to 20 pay life, because we have one of the strongest 20 pay lives in the industry. And let's just pick, say, for example, you're doing somebody maybe in the final expense market, and you're doing, you know, a 50-year-old. You can see where I put in the age. I hit male. Over here it says select state, so you just hit the drop-down menu, and that's a nice way too. Reminder: if some of you are probably in the North Carolina, South Carolina, Georgia, you know, wherever you're at, but let's just say, you know, someone's writing over North Carolina, you hit North Carolina. You can see the class is non-tobacco. We're going to put in the amount of insurance right in this box. So let's just say you got a 50. They want to do. Let's just do 25,000 coverage. All right. So you look over here. To the left, we selected 20 pay life. We put the age, the sex, the state, what class they're in. We put 25,000. Then over here, you can hit annual or monthly. I like to hit the monthly because it will give you the, when you do the illustration and print it out, it will give you the yearly total. So over here, you can select the dividend options. I always tell the agents to do paid up additions, but we do have the other ones: cash, reduce premium, accumulate interest, you know, and you can get paid for that at the end of the year. And then add a rating. Once you hit add a rating, okay, and you come over here to, you'll see standard. Once you highlight the standard, you'll hit this arrow here, and then you come down and you can put a table rating on it. We go up to 8 tables in there. But let's just do standard for this. You can add the riders on too. So you can see you can do waiver of premium, accidental death, 10-year renewable term. You can add a term on there. And those are some of the things you can experiment. That's why when I would like for Micah to send that out to you guys so you could just experiment and see when you add riders on and see how easy it is to use this application. But one of the things that's really nice about this quoting tool is you come over here and you see you're looking at an age 50-year-old male. You're doing 25,000 is the face amount. The monthly premium is $64.76, and the yearly is $777.12. But the unique thing I like about this, if you want to do a plan comparison, if you want to compare the other two products we have, which is ordinary whole life and single premium, all you do is hit plan comparison, and you'll see then you have your ordinary life, which would be $51.75 a month, or $621. Or if they wanted to do a single premium, so say maybe you have a UL that's blowing up and they have some cash around, maybe it's a couple $1,000 or whatever it is, you can go ahead and put that money towards a single premium, and I can show you how to do single premiums on here too. But then once you do that, you come up over here and you hit full report or quick report. I'll show you what the quick report looks like. The quick report is just taking one of the single pages in the full report, which is just, let's see if I can move this over here. There we go. And that's what that looks like. So again, what you're looking at is year one, which is age 51. Okay, you're putting in your first yearly premium, which is $77.12. Your death benefit's $25,000. Unique thing about this product, and I'll get to the full report, but I want to just show you, they're going to be done paying on this in 20 years. They're going to put $15,442.40 in, but their cash value is, even though you'll say, well, Jeff, that's the non-guaranteed side. We've never, ever not paid on the non-guaranteed side in 126 years. So I feel pretty confident telling you that, this is what your client will get. But again, if they ask you, you have to go to the guaranteed side and say, look, you're guaranteed this. This is what your cash value is going to be. But again, if you look at this, they're actually getting more cash back. And if you look at the death benefit, the death benefit is growing about almost, $4,000 in those years. But let's look at that. That person's only 70. So let's look at that. We'll scroll down here and let's look at that when that person's 80. Again, they're not paying any more premium now. So the cash value is growing just on what's in there. But you can see when they're 80, they're going to have $22,968 of cash value. Their death benefit went from $25,000 to $31,700. Okay. So I'm going to get out of this and I'm going to go over to the full report. And this is what you'll need to print out when you take this with you to your client. And I'll scroll down here. Move this over a little bit. Okay. So we're going to scroll down a little bit here.
And Jeff, I'm sorry, but it is lagging just a little bit. I mean, it catches up, but it's kind of hard to follow just because of the lag. But we're with you though.
Okay. So you can see here the front cover page will be National Slovak Society. It tells you what plan you're buying, and then again, there's a place where you can put your name in. I'll show you that. This was a guy that I just did in North Carolina, and recently just sent a quote out Saturday to him. Let's see, February 14th. So when was that? I guess today's the 14th, but this was Saturday. I sent one out to him. But anyways, we'll go on here. We'll slide down. Again, the page that you want to get to, it's the third or fourth page down, is going to be the page that I gave you the quick quote. Quick version is, it's coming up here. This is the page, where the rubber meets the road. This is where it talks to you about, shows you, explains the monthly premium, $25,000 face amount, the age of the person, what their status is, and then there's also a signature page that you'll see down here that you want to make sure that your clients will sign, and it's right here. So again, your applicant date, and then this is for the agent's name will go in there, and then you sign it. But you want to make sure you take that with you. If you do not do an illustration, we will send one from the home office when we send out the certificate. There's two options. We'll get into some of the logistics. You have two options with us. We can send the certificate to the agent, which is you, which we like to do because then you get to deliver it and find out if there's any other needs, to go over with that client. Also, it helps reinforce the reason why they, bought the insurance in the first place from you, and then make them feel good about what they did, protecting them or their families. And And so that's, some of the things. And again, I'll reiterate, if you did not do the illustration, we'll send one out. We provide an envelope for them to sign, and then we leave a copy for them too, if you don't do it. So that's like, something you don't have to worry about if you say, well, what if I don't do an illustration? Okay, I wanted to show you too, remember when I said the quick report? That's the quick report, and that's the full report. And then once you get in there, you can go ahead and save that. Once you open that up, you can save that to your documents as a PDF. You can do whatever you want. Remember I was telling you about the agent. Here's the agent. You just double click on that agent icon there. Up here we go. Okay, and then again, you would put your name in there. So if it's Bill Smith, put Bill Smith in there. Then that'll pop up. Sorry about that. That'll pop up in your thing, and then you can put your address and all that, and your email and your license number if you want to do all that. But just so and then you hit use agent. That'll come up in there. Again, that's pretty much in the nutshell. I just wanted to go through that with you. You can see the ordinary life. I'm going to do a single premium because our single premium is very, very aggressive. I've shared that with Messer's financial marketers. Let's do an age 60-year-old. Let's do female this time. Let's come over to a single premium, and in a single premium, always you have to put the premium in because say somebody I was telling you and mentioned about ULs. A lot of ULs are blowing up, and this is a great tool to use. Say, for example, this is a true life. I'm giving you a true life example. We had a 60-year-old female. In fact, she was 62. So I'll put her real age in there. 62. She had about $13,000 in a UL, and she was afraid that let me see here. She was afraid that it was going to blow up, which it was, because she was going to have to refund that more money, have to put more money in that to fund it, or she was going to run out. We calculated like in 1.8 years she would be out of funding it, and she'd have to be putting more money into it. So what we did is we took that $13,000. Her policy was for $30,000 to begin with, life insurance. But look at this this quick report. We took the same person, age 62, female. She put $13,000 in, and I want to show you what we did for her. We gave her a peace of mind that she'll never have to worry about paying any more money towards insurance. The other thing is she's settled for life in this, as far as her being able to not worry about have to fund any more money into that. And I want to show you when I get down to this page here what we did for her. This is where the rubber meets the road, and that's why I like to show the agents this, because this is most important to you guys. Let's see here, go back. One more, sorry about that. Okay, here's what we did for her. Again, remember, she's 63. She had the $13,000 from UL. She did have a $30,000 policy, which we didn't give her right off her death benefit. But look how that's going to grow. She puts the one time in for $13,000. Again, remember, we were looking at the non-guaranteed side. But even if we look at the cash value on the guaranteed side, in 10 years when she's 72, she'll have $15,885 in there. On the non-guaranteed side, she's got $17,000. But in basically 10 years, she's almost back where she was for the life policy that she had for the UL. But again, remember, she was going to run out of funding in 1.8 years and start putting money in. She took all her money out of her UL. She had $29,505 now as a death benefit, but she's going to live longer than that. So let's say she lives to say 83. We'll go down here to 83. Look, she's going to have $32,360. She has either cash of $20,000 or $23,000. If you look over in this column is the guaranteed column here, and then over in this column is the non-guaranteed. That's $23,817. So we've done a great thing. So this product is really good for. It's one of the better single premiums in the industry, and you can see once you put your money in. Most of the times, it's either after the second year, if you look up here, after the second year or after the third year that they get all of their money back, as far as what I'm talking about, their basis that they put in. Okay, so we're going to go through that. One more, sorry about it, I opened up 63 of these. All right. Again, that's our illustration software. I'm gonna close out of this, and I just want to show you again. Once you download that software, what you'll have is this icon right here. Okay. I want to get into two more things. I want to go over underwriting helpful hints, so you understand the helpful hints that will help you in the field and things that are unique to us in our procedural things. The other thing that I want to show is I want to get into, we just came out with a anniversary offer. And Micah, I don't know if you sent that out to the agents yet, the anniversary offer, but this offer, the reason why I'm going to get it to you guys and ladies is because it's only good through the end of March. But this is an NSS Life anniversary offer. You can see here on this, and this is a flyer that we have, and Micah and I can send that out to you. But what it is, it's an offering of quality life insurance for a limited time only. It means everything has to be postmarked. If you look here, any application has to be postmarked by the 31st of March. Now, sometimes we do extend it for a month, one more month, which would be through April, but I can't guarantee that. So if you have anybody that wants to write this, or you want to write it on, you want to take advantage of it. But come over here to the left and just look at what I'm showing you here. I'm going to scroll this up a little bit. You can use the 20-pay life, the ordinary life, or the single premium for ages 0 to 50. Because remember, for ordinary life you have to be at 10,000 above. So you can use ordinary life, single premium, or 20-pay life for this category. For these ages, you have to use either 20-pay life or single premium, and for these ages, you have to use 20-pay life or single premium. And I'll show you the rates. Again, here's your disclaimers. You will fill out an application, a regular app, which is the LAO4. It's our long app, and I'm just giving you some criteria. And then in the right-hand corner of that app, you put anniversary offer, but it's a simplified issue. They're going through no matter what. Here's the questions they get. If you look here, it says, anyone previously declined since 1/1/16, that means 2 years ago, is not eligible for this program. Also excludes terminally ill, permanently disabled, those on SSI, it should be Social Security disability. That means if they're on disability, and mentally impaired individuals. The SSSI, if someone is on Social Security for disability for back, that does not disqualify them for this. If they have a back issue, we'll still let them have this. That's if that's the only SSI disability thing that we'll let them in on is for the back. If they have mentally impaired individuals, so those three, if you look at those again, I'm just going to review those with you. Any terminally ill, permanently disabled, those on SSSI should be SSID, disability, and any mentally impaired individuals. If you purchased this plan last year, you're excluded from this year's offer. Okay, other exclusions may apply, but again, this is a simplified issue. You put on the application, as you're writing it, you put in the right-hand corner, anniversary offer, and this is on a 20-pay life. These are just some of the rates. So, for example, you can see how we categorize these. For example, if you have, let's just go over here. We'll go down to the bottom one here. We'll just take the highest age here for the 20-pay life. If it's a 50-year-old, and I think this is a female here, this is your annual premiums, $317.80 a year for the $10,000 coverage, and $261 for the female. And then over here, you got age 66 to age 80. For an 80-year-old that wants $5,000 worth of coverage, it's $465.40, and $383 for a female. But keep in mind, when you do the 20-pay life, you have to do 20-pay life on this, the $5,000, you're still going to do the illustration, and they're still going to grow in cash value. Okay, that they still get cash value. That doesn't exclude them. Some companies, when they do like a simplified issue, they say there's no cash value. So real quick, let's just take this. I'm going to take this. We'll go in the middle here. We'll go 75-year-old. We'll just do an illustration real quick. I'll show you that, the power of that. We'll do 5,000. We'll do a quick illustration on this so you can see. And then let me just scroll up a little bit here. Again, this is the other age group, 51 to 65. You get 7,500. Okay, so let's just do a illustration. We'll run it for a male. We'll do 75. We'll do the 5,000, just so you can see if that person, say, lives another 20, 15 years or 10 years, what that looks like for them. All right, so we'll come over here. We'll put the age in. I'm moving pretty quick. 75. We'll put in the 20-pay life. We're going to put the $5,000 because remember that's the limit they can get. And then we're going to go right here and do quick view. I'll slide this over. And it's come on. Okay. There we go.
Hey, Jeff, can you hold on just 1 second? The screen is frozen again. I'm trying to wait until it pops up. So just hold on 1 second for it to catch up.
Just let me know when it comes up.
There we go. All right, now we can see. Can you go back just a little bit so you can see how you got there?
I'll go back. Yep, I'll show you. Remember on that front flyer that we had for the anniversary offer? So what I did is I hit the icon for the illustration, then I went over here and I put the age 75, male, and then I hit 20-pay life right here with the check mark, and then I put the $5,000 right here. I put 5,000, so we'll get that out. I'll do that again. $5,000 is the face amount. And then what I want to do then is I hit quick quote, just so I can see the quick quote. And then when I hit quick quote, this page comes up, and I'm going to slide this over. But I just want to show you, even though you say, well, that's not a ton of life insurance, but, it's a simplified issue. But let's say that person lives another, say, 13 years, and they're 88. Okay, they're going to end up with $6,200 of life coverage. Which, today's age, like you said, funerals are between $7,000 and $10,000, and I'm sure you could get, somebody along there, but that helps out with the funeral burial costs. Again, if they live longer, say that person ends up living 20 years or say 15 years, it continues to grow in the cash value. And some of those other ones, like I showed you, remember the 50-year-old, we'll do that real quick, and we put the 10,000 in. Because that's the limit for that person. Let's just we'll put 10, just so you can see what that looks like. And let's do a quick report here, just so you can see what that looks like. So now you got a 50-year-old, even though they're only getting 10,000, but that's more powerful for them. But look, when they're 70, they already got $12,200 worth of coverage plus $6,900 in a cash value. And then if you come over here and just say when they're 75, which have a pretty good chance to be alive at that time, they're already at $13,200 of life coverage. So even if they live to be 80, just 30 years or 14,000. So you can see 14,200. Okay. All right. What I'm going to do real quick now is I'm going to take you guys through just our helpful hints in underwriting. So you'll have this. And Micah has this. There's a couple of typos on this. I got this from the home office, and they redid it for me. But if you can see on these bullet points, there's no witty. It's no white. So I'm going to go over this with you. Again, these are helpful hints. I asked the underwriting department for some tips, just so that it makes your life a little easier and you don't have to repeat doing something. So I'm going to read through these. The best thing is I'm going to tell you we have two applications. We have this LEO4 is the long app, and it's considered for anybody over 60 and $50,000 face amounts and higher. I recommend that you use this app on everybody because it's really not that long, and Micah can attest to this, that it's just one extra page of some medical questions that you hit yes or no, and it will save you some headaches in the background. If the underwriting department needs some more information, you'll already have that done. So just make a mental note that I would use this application, the LEO4, on everybody, even if they're under 60 and it's under 50,000 amount. Okay, and again, the LEO5 is just our 2-page app. And again, 4 pages, that's not 4 pages of writing medical questions. 1 page is a signature page. 1 page is information on beneficiaries and the information on the client and, that. And then the other pages are, some medical questions and some other things. Again, they ask that you put no whiteout on the applications. If you make a mistake, draw a line through it, so that and have the initial, initial it. Again, we need to name the phone numbers and address of the testing physicians. Put that on the application. Make sure you do that. And then if you have fax numbers of the physicians are also helpful. If you have a fax number, if we need an APS or something from them, or if we need, sometimes we send out just a form. Maybe the person has diabetes and blood pressure and cholesterol, and we might just send out a form saying, how many times a year do they come see you, and are they compliant with their medication, and they just want them to hit, the boxes, yes, sign it and send it back to us. So that fax number can help. When providing a list of medications taken, this is really important. Please provide the information as what the medication is treating, because if the underwriter gets it, they have to look at what's the worst case that medication can be used for. It might be used for a lesser disease state. That's why we ask that you ask the client, why are they taking that specific medication? Also, on the HIPAA form, you must put the name and the birthplace, proposed insurer. And here, remember this, on the HIPAA form, do not put the doctor's name or dates or service on this. And here's the reason why. If you have the client sign it and you sign it on the HIPAA, then we have a HIPAA form that's blank. And maybe they have an orthopedic doctor, or maybe they have a PCP, or maybe they have a heart doctor or an internal guy too. Then that way, if we needed to get records from the cardiologist and their PCP, we don't have to come back to you and say, you put Dr. Smith, he's the PCP. Now we need Dr. Jones, he's the cardiologist. So you just fill out one HIPAA with the signatures, and then we'll take care of filling in the doctor's name. Okay, here's another thing. NSS Life Underwriting Department will order all exams and labs. You don't need to do any of that if you need that. You don't need to do any of that we'll take care of it. Again, when application for life insurance on children 50,000 or more need amounts of insurance and all siblings and parents. That's just a quick note. Again, on bank drafts here, for first premium, we always ask that you get the first check, a premium. That's just that's the way our system's set up. So you just get the first premium in a check. So if it was $37.50, you get a check for $37.50. You make a photocopy of that check, and you take that check and attach it to the EFT form, and then the next month they'll draw it out of their bank account. And then this is just a W-9 for it is needed. Like here's another thing: if a W-9 is needed on a proposed insured, and if there is an owner within a W-9 is also needed for the owner too. So it just tells you if we do fill out a W-9, you need that. And then again, they said do not copy unrelated forms on the back of other forms. If you're trying to condense your copying of forms, do not copy forms back to back, because sometimes we need those forms and they don't want to have other stuff on the back of it. And then again, I mentioned this about quotes for life annuities, download illustration software. If you don't do this, the illustration at the time of selling it, we will send one out. Okay. I think that's everything, Micah. What I'm going to do is I'm just going to put up on the screen here one more last time my contact information, so everybody can have that, so you can maybe write that down with my email. Micah will attest to this. I get back to everybody the same day. I'm real picky about that. I've been trained with major companies, and I've been a manager and a national manager for years, and that's one of my big pet peeves. Get back with somebody on the same day, even if you're too busy. You just say, listen, I can't get you the answer today, but I'll get it tomorrow, just so you reach out that they know that they got somebody that cares about them on the other end. And I'm going to, hopefully everybody has this copy down, and I'm going to go over to the software illustration so that you can all copy that down, and sometimes you need a little bit more time with all the backslashes and that. But the first one is the illustration link. This link is the illustration software link for your computers and your laptops. And this is for your handheld devices. I have this on my iPad, and I have this on my iPhone. It is beautiful. I can't tell you how many times I had to pull off the road to get to my laptop to get a quote to somebody. Now I just pull off, and I can do it in 10 seconds and email it to them. And then again, it sends a copy to you, so you can follow up with that client or that agent. All right, Micah, I'm ready. Finished.
A few questions. Number one is, can you go over the scholarship program one more time on who qualifies for that and how that all works?
Sure. Real quick, I'll do that. All you have to do is you have to have a child buy one of our permanent life policies. Obviously it would be a parent or grandparent buying that. And once they purchase that, here's how that works. When the child is going into their college year, their first year of college, which will be their senior year, they're graduating high school, we start sending out in February in the publication, say in the front of the magazine, please check for scholarship application. And how that works is there'll be an application in there that they fill out. It's very simple because my kids, I belong to my fraternal plus 3 other ones. And here's how it works. You fill out the application. you put their name on it, and then they have to do a 100-word essay, 100-word essay. And it'll be something like, if you had to make, your school a better place, what are some of the things you could do? And then you send that in. They have to be going to a 4-year college, a community college, a nursing school, a trade school after that. And what we do then is they have to have a C average. We have to get proof that they are attending that college. And then every year after that, we just get a copy of their transcripts showing that they are a C student. And then what we do then is we send the $500 check each year at the beginning of the year. We send a check either to their institution or it can come directly to the family. My kids do it to us. We get them sent home so that we can help them with manage your funds. But then we also use that for book money. And then you get a $500 scholarship every year for 4 years, which amounts to $2,000.
Is there a length of time they have to have the policy to be able to qualify for that?
No, we like them to, get it, probably it's like 3 months before they're going into their senior year. So probably like right around now, they would get that and they would qualify.
All right. What is NSS's AM Best rating?
Okay, we do not have an AM Best rating. What we do have is we go on our risk-based capital because we would be a B++ to an A-, and we did have a rating before years ago, and I would always have to defend why we're an A- or a B+. But what we do is we have financial documents that I can send to you. I just sent them out yesterday to a couple clients. We have one, it's a comparative report, and then we have another one that talks about our financials. And while I'm looking at this, I'll see if I can pull that up real quick while we're doing that. Again, I can get you that information. But again, our risk-based capital, that's what we are measured on in most insurance companies. And you have to be around 200% to 250 to just be viable. And we're between 350 and 450 of a risk-based capital. That's us mostly. So I'm going to see if I can find this email that I sent this out yesterday. So, and then I'll pull this up and then I'll show you this financial document that I have. But we're very good standings. We're $1 billion. Like I said, if you need more on the financials, I can get you all that too.
And Jeff, could you run a quick illustration for, let's just say, a 5-year-old child on a single premium?
Sure.
For, let's say, a $10,000 benefit?
Yes, I can do that.
Just so we can show exactly what kind of rate that would be?
Yep, I will do that. And I just want to show you this first. This is our comparative report. Did that come up on your end there, Micah, yet?
No, not yet.
Okay, well, I just want to take you to the financial part of this, and I have another document. Let me know when it comes up on your end.
Sure. And for those that want to get contracted with NSS, you can go to the Messer Financial website under the Agent Resources. There will be a place where it'll say Online Contracting, and you can create your profile and go through there. And if you need help with that, feel free to give us a call. We'll walk you through that process. And your thing just showed up, Jeff.
Okay. Here's the thing you want to look at. I got another financial document that'll go over and I can send it to you. It's a brochure. We take the last 3 years of our financials and just review them with. It's called Financial Facts. But this is where the rubber meets the road here. If you look over here, solvency. This is assets for each $100 of liabilities. If you look here at some of the major companies nationwide, John Hancock, you can see 10404 is, and we would be right in this category. We'd be right behind American General Life. We're a 10444. Also, liquid invested assets. These are assets in bonds, stocks, cash, short-term investments for each $100 of liability. Average of the top 25 companies is only $47.06. We're at 102. So you can see invested yield. Our yield is 4.8. We do very good for our investments. That's everything we invest in. That's what we're getting back. And you can see the top 25 companies are a little bit below us. And then over here, surplus, life insurance in force. Again, we're way higher than anybody else. And you could just see these are our admitted assets, our liabilities. So we're a very strong company. We're not going anywhere. And again, I reiterate this, in 126 years, we never, ever had to go off of that non-guaranteed side. And while I'm talking about that, we'll go get that child's quote here. And the reason, that's one of the things that's great about this. We have never had to do that. So, okay, let me go back here. All right. Get out of here. Oh. All right.
And you guys saw how low the rates were for a 6-year-old and above. So I will put their rates against any carrier out there, and it's pretty much
Mike,
be a no-brainer for the clients.
What was the quote you needed for a single premium for a child?
I just wanted to show for a child, like a 5-year-old, let's say a 5-year-old female, running for like $10,000.
Okay, we're going to do that. Yep, and this is a great investment for grandparents. We use this a lot for grandparents, because they want to leave a legacy for grandkids. So if you take an age 5 child, that's a female. Again, we're doing the single premium. We're doing the amount is what we're putting in there is $10,000 is the premium. So here we'll go over here to the quick report. I know it might be a little delay there.
No, do it for a face benefit, a death benefit of $10,000, not a premium.
Oh, okay. I'm sorry. All right. So we'll do. Okay. So there's what you're looking at. Again, it's the amount that they'll be paying is $750 in the single premium, and then I'll do the quick quote for you.
So let's think about that. So $750. You're going to have a fully paid $10,000 death benefit whole life policy for a child. So one-time payment, and that's going to grow in death benefit and cash value over time. And then when the child goes to college, as long as they maintain a C average, they're going to get up to $2,000 worth of scholarship money. So you pay $750 one time. You've got a fully paid $10,000 whole life policy with $2,000 worth of eligible scholarship money available. So that's a pretty great gift for a grandparent to a child for $750 to know that they're going to be protected and they're going to get scholarship money on that.
Yep. And then if they leave that in there, which they should, for their lifetime, just never touch it. Say that person is, lives to 85. We're just looking here at 85, that female. Hopefully back then they'll live longer with the things that are coming down the pipe medically. But let's just say 85. They're going to have a death benefit of $16,728, and their cash value is $12,579. Even if you go over on this side, if something changes, their death benefit's still $7,500 in cash value, and they put $750 in. So, I always, that's a good point too you make, Micah, because I have some guys and agents these are great door openers, even if you did a $500 investment, or this is $750 and we're giving you $2,000 back, you're getting basically, close to $1,250, $1,250 back for an investment of $750 because of the scholarship. So
now let's just say that they don't want to do a single pay. What would a 20 paid monthly be on that for that same client?
Yeah, it's peanuts. So you can see here it is for the 5-year-old. They're putting the $10,000. You're doing a 20 pay life. So let's just do that's annual. Let's do the monthly. And the monthly is $5.92.
So guys, think about that. For $5.92 a month for 20 years. That child's going to have a fully paid $10,000 whole life policy and qualify for $2,000 for the scholarship as long as they maintain a C average. Now, to me, for $5.92 a month, if you're not having at least something on that child, then you're not doing them a service. So, again, a great product to have in your portfolio. And just real quick, Jeff, there's a few more questions.
Sure.
Can the software and app perform on Android phone and tablets?
Yep, they'll work. Yep. Yeah, that software will work on it. That's a great thing. The nice thing about it is when you do that quoting tool, let me see if I can just pull up from my email what that looks like, the quotes. Let me see here. Let me go back here, just the sent inbox. What they look like when they come to me. Real quick, I just want to show you what that looks like. I did some quotes here. Here's NSS quote. I said, see, they come to me no matter what. Here's what it looks like. So, like, I had this quote that I did, forget what day it was. It came in, I think this was Saturday. Yeah, this was Saturday. This was for a term quote that this guy needed for a 69-year-old female. But this is how it looks like when it comes off your phone or your iPad. But this will be sent to you and to your client. So your client will see, female standing on tobacco, New Jersey, 10-year renewable, $2 million, and this is what it is for that, and then your name below that. So it's pretty nice. So it's a really nice tool that we got. Here's another one here. Quote. I'll show you one that just come up with. Let's see here. If I can find it. Probably can't right now. But anyways, it's pretty nice the way that it works. It's a great tool. We just got it. So, any other questions?
I think that's it, Jeff. I want to thank you for taking the time to join us for this webinar. I think we've learned a lot of great information. I'm sorry, everybody, about the lag problem. That was unfortunate. But again, if you have any questions, we can always do it on a one-on-one basis. You can give us a call. I know Jeff, I can attest to that, is very responsive to any questions. If you want to email or contact him directly, you're more than welcome to do that as well. Again, we really, really highly recommend them to have this product in your portfolio. They're great for seniors. It's a better product than a final expense product because it does gain cash value and grow in death benefit. And for children, the rates make it a no-brainer for them as well. So great gifts for everybody. And I hope that everybody got anything. And if you have anything else to add, Jeff, anything?
No. If you need anything, again, please, you can. If you missed something and you didn't catch it, just call me. I'll spend time with you over the phone. Whatever it is, if you're in Georgia, North Carolina, South Carolina, I come down there probably every 3 to 4 weeks. I could definitely sit down with you over a cup of coffee or breakfast, lunch, whatever it is, and we can either meet at Messer. Whatever we need to do to make it easier for you guys in the field, I'm here for you. And like I said, that's why I do illustrations, because that's where the rubber meets the road for you, what you're offering to your client. And and I do spend a little bit of time on the company, but the most important thing is, we'll be there. The company's going to be there, but the product it sells on its own merit. And so that's why I wanted to show you what the value is in the premiums.
So again, guys, I want to thank everyone for attending. I know it's a holiday, Valentine's Day. I hope everybody has a great day. And again, if you have any questions, concerns, comments, anything, don't hesitate to give us a call. We look forward to working with everybody. Thank you, everyone.
Thank you. Thanks, Micah. Everybody have a great day.
Bye-bye.